Be on time. See?
I see that. No.
It takes a couple minutes
to keep me on track.
No, I'm sneaky like that.
You are. Good morning. How are you?
Good morning. I'm good. How are you?
Good.
Yeah. You look very summery and
yeah, it's humid out there, so you gotta hair up and
I know. I'm in my tank top. I'm gonna go back and work out in the addition in a little bit once we're done with this.
Yeah.
But did you have a busy real estate weekend?
Not really busy real estate wise. No, I went and saw the new Jurassic World with my nephews, and then I met a baby deer.
That is so funny. That is so funny that you were able to have that deer just come up to you.
I've never been so happy in my whole life. I was.
I'm sure John appreciates that. I said, I'm sure your husband appreciates that.
Yeah, he wasn't thrilled because I looked right at him and said, "This is the best day of my life."
Oh, that's funny.
Funny.
So we are we're a minute and 15 in, and so we might as well
start.
And we wanted to talk about some new things today. So we'll kind of get through the numbers real quickly, but then we wanted to talk about what we're seeing in the market. And we were provided a really cool video link from Mike Thompson with Envoy Mortgage.
Thank you, Mike.
Yes, thank you, Michael. That had to do with an economist talking about what we're seeing in the market. So we're going to talk about
getting a little shifty.
Yeah, it has definitely changed in the last couple of weeks. So let's real quickly, we'll go through and get our banner numbers in there first. So new active listings.
A little bit of a decrease, 538 this week versus 587 last week. So slightly less.
But coming soon, we got a little bit more. So again, good news for those buyers.
Yep.
A lot went under contract last week.
Yeah. 695 versus 529 the week before. I think the week before was like Memorial weekend and that. So there a little bit of a decrease there, maybe because of that.
Back on markets, that's something that we started tracking a few weeks ago. So again, pretty consistent in regards to what may have gone under contract or been a temporary layoff market and then came back.
Right.
Price reductions.
Yeah. So 200. Yeah, 203 versus 165. This is a big one to keep watching.
Right.
So overall, do you want me to hit that now or?
Yeah, let's talk about that because that was one of the things that in this video that we don't want to totally, destroy this man's name. This economist, his name is Logan Matasha something or other. And if you guys want the video, we can share the link.
We can send it. Yeah.
But he was talking about price changes. So why don't you tell them what we learned?
Right. So in a normal market, you have about a 30% of the current inventory having a price reduction. So nationally right now, what Logan shared is that we're at about 18%. So we're still well below that normal market point. In our current market, there's 1,990 homes for sale, and that's Buxley, High Montgomery.
Stop and say that number again, Trisha. How many houses are there for sale right now? Because everybody feels like there's none. How many houses are
1,990, almost 2,000. So you got some to pick from.
Inventory is increasing. So of that 203, if you divide that by the 1990, what is our average price reduction?
We have about 10% price reduction in our market. So we still 30% is the normal. So we're still well below normal, but we do need to watch that number and kind of prepare for that.
Right. So now let's talk about new data that we started doing. So days on market is something that we just started last week. Right. So houses went a little quicker this past week.
7, and that could be because there was a little bit less listed, but 7 this week versus 15 last week. That's from the time they hit the market to the time they go under contract. That's what days on market is.
All right. And now we've got the big one that surprised us a lot. So guys, we were, I'm going to wait before I show this banner.
Oh, the suspense.
So we just said there's 1,990 homes that are for sale in Bucks, Montgomery, and Lehigh County, give or take. Right. So one of the things that we were prompted to do, because we have seen some things change in the last few weeks. It's just different. It feels like there's more
Feels
houses
different.
out there.
Yeah.
And one of the things we decided to check was months of inventory. And Trisha, why don't you explain to everyone what that means of months of inventory in stock?
So we track exactly what you said, months of inventory. And what that basically means is if we stop listing houses today, how long would it take all of the houses to sell out?
Right.
A balanced market is 6 months. We've been 1 month, less than 1 month worth of inventory for a long time now.
Yeah. Yeah. But
yeah.
But when we decided to start looking at this, one of the things is that it was interesting in February, I think it was February, we were at like 3 months of inventory.
Yeah.
Even though it didn't feel like it, it says we were. But for the month of June, for Lehigh, Bucks, and Montgomery, you guys ready for this?
Well, hold on.
5 months of inventory is what Bright and Lehigh Valley Association of Realtors are saying for the month of June.
Right. And for the county, it's like there's pockets naturally that have less. Right. So that's a broader range there. Right. But that's
showing reality of we could be getting closer to what a normal market looks like.
Right.
Which is great for buyers because there's going to be more inventory there. Right. And I know that, 5.5% interest rate and inflation and all of that, but let's be clear, 5.5% is still good.
Yeah. What were you telling me yours was when you
bought? My first house that I bought, I was at 9.25%. Yeah. When I went to move to Virginia back in 2000, I was at 12.5% for a townhouse.
Yeah.
It was just
money is still cheap right now. 5% is still cheap.
But one of the things that we saw was keeping current matters, which is huge.
Yeah.
I'll let you talk on this slide, Trisha.
Okay. So I've been getting a lot of questions over the last, because we keep hearing about the recession and the recession's coming. We got a couple months till recession, all of this. And what is that going to do to housing? Are you worried about a crash? Are you concerned with the crash? Well, this Keeping Current Matters put out this little graph for us, and they did they compiled all the data and put together this chart. And what this proves is that over the last 6 recessions that we've had, only 2 of those have had decrease in home values.
Right.
Which is huge. So that doesn't necessarily, just because we may be heading towards a recession, does not necessarily mean that we are heading to a total housing market collapse.
Yeah, houses aren't going to decrease. We might not see them increase as quickly as they have, but at the end of the day, it's still a great time to buy and it's still a great time to sell.
Right.
And it's better to be putting your house on the market now as we're still kind of a seller's market.
Right.
But at the end of the day, our sellers need to be aware of the fact that there is more out there now. And it's really smart to be pricing accordingly, because you can always price and go up.
You cannot underprice in this market.
You can't.
I can't stress that enough. You can very much overprice.
Yeah. So guys, that is some new information that we wanted to share with you, and we'll continue to look at days on market, months of inventory, keeping track of the price reductions. But that is what happened this past week in real estate.
Yes. Yeah. So let us know, as always, if you have any questions that you want us to hit on, let us know in the comments. I'm sorry, this thing does not let us see comments now. So
yeah, I tried to know.
We'll figure it out next week.
Guys, we will see you next week. And if you have any questions, reach out. Have a great day, guys.
Have a good one.